You need to understand one single thing from this video, and that is that you should pay a lot of attention when it comes to protected highs and lows, because they make a huge difference when it comes to technical analysis, especially for the smart money concept traders. The protected highs and lows are related to swing points and to the market structure. And if you don't know a lot about market structure, you will see that you will have some struggles when it comes to choosing the best POIs, and also you'll be kind of confused when it comes to what trades to take and what trades to avoid. So this is what I'm going to do in this video. I'm going to present you the importance of protected highs and lows and how to observe them and how to mark them and what's the reason behind them. Hi traders, in case that is the first time on this channel, my name is Andrea and I've been a trader for the last 4 years in the Forex market, and on this channel I chose to share free tips to talk about Forex trading in order to make your journey easier while learning. So if you're into this kind of stuff and if you want to learn more and if you want to see more of my videos, don't forget to like and subscribe and also to leave me a comment regarding what you want to see on this channel. Okay, so let's jump directly into the topic. The protected highs and lows are usually swing points, and you can find them on absolutely any time frame that you use. If you go to my YouTube channel, you will see that I also made another video about time frames and the importance of them. So for now, I want to write two simple ideas about protected highs and lows. So the first idea, when a bearish break of structure happens, so right now it means that the high is protected and the low is weak. It's similar to a bullish break of structure. The low is protected and the high is weak. So as you can see, we have two possibilities here. One for a bearish market and one for a bullish market. As you can see, the bearish leg formed and also the bullish leg formed. So we know that inside those legs we have some movements, like some bullish movements, bearish movements on lower time frames, or whatever. It can be on the same time frame too, it doesn't really matter. The idea is the fact that you should pay attention to the swing points, meaning the highest point and the lowest point from this structure. Here, when we see the bullish structure, again, you pay attention to the lowest point and to the highest point in the market. Okay, so what are the swing points? The swing points, meaning the swing high and the swing low, are exactly the points before the break of structure has happened. So this is the highest price point before the break of structure took place, and this is the lowest point before the break of structure took place. Again, here when we have the bullish structure, this is the highest point before the break of structure took place, and this is the lowest point before the break of structure took place. And usually I mark them like this with the curve tool, so you can do the same. Okay, here too. So we have the swing high, the swing low, again the swing high and the swing low. As you can see, as you can observe, these are the points, the extreme points from the chart right before the break of structure happened. Now you see the theory right here. We have a bearish break of structure over here. So this means that the high will be protected and the low is going to be weak. So you can change colors in order to observe it. Also, when a bullish break of structure happens, the low is protected and the high has been taken, so it's considered weak. So basically the price point that is being taken based on the structure is going to be considered weak because the market took it. Okay, so how does this information helps us? It helps us in the bigger picture. You can combine it with premium and discount, because usually if we are waiting for a trend continuation, we know that eventually the market will never take the protected swing high or low depending on the structure. So for example, if we see this structure over here, we know for sure that, let me change the color a bit, we know for sure that when a pullback will happen, the chances are smaller for this point right here to be taken and to face a reversal. So let me put it a little bit below. We know that the market can maximum arrive up to this point over here, so something like that. We do not expect for the price to go further. If it goes further, it means that the structure will change and this high will not be protected anymore, and we will see something like this. Like, let me draw on top. We will see a break of structure to the upside, which invalidates the one to the downside. And the structure will change, because right now we will consider this a bullish structure. We will see this swing low protected and the swing high will be and the swing high will be weak. But again, only if we see a reversal. Usually the trend continues, so we don't face this. We can see something like this, or I don't know, another movement like this one. Maybe the price goes next to the extreme, but it won't go above the extreme because this high is protected. It's the same for the bullish structure. If this is the structure that we have, when the market makes a pullback, meaning a bearish move in this situation, you will see that it will maximum arrive down to the protected low and not more, and then it will continue the bullish movement because we are in a bullish market. If you want to take trades based on this theory, if you want to practice, if you want to create a new account with a broker, the one that I use at the moment is HeroFX. I left a link in the description box for it if you're interested. I also know that they have a contest going on right now. They have like $25 for minimum deposit and 1 to 500 leverage. So again, guys, if you want to practice and if you want to trade with my theory, that is the broker that I recommend. And right now I want to give you some examples, some real examples on chart, because this is what's the most important thing. Okay, so we are on the 4-hour time frame on Euro USD, and what I see is this clear structure over here, and I think that I'm going to start from this point to this point, and I will draw on top. We see a bullish leg, a bullish movement, and then after that, of course, the market moves in waves, obviously, but the idea is that the market continues to go bearish and actually takes the low that was formed over here, which is the extreme point on the chart that we can see. So the market made a 4-hour break of structure to the downside, meaning the fact that from the theory, if you remember, we have a swing high, which is the extreme point from this structure, and the swing low over here, which is going to be weak again if you remember the theory correctly. This means that if we trace on top the premium and discount area, it will be from here to, I don't know, let's say that the market stopped somewhere around here, right? Basically, what we expect from this structure is to go like this. Now that we have our swing high and our swing low marked on chart, and now that we know that the swing high is protected in this structure, we are going to watch for buyer's maximum over here, and this means that this place is going to be good for taking sales. So remember that the confluence is the fact that over here we consider it as the maximum point where the market can arrive in order for it to continue bearish. If it goes above this point, from now on the 4-hour structure, we consider the fact that the market had a reversal move and we are not bearish anymore, we are going to be bullish. So only if this happens, like this, if it goes above the swing high. But usually, again, as I told you, you are going to look for sales, especially if the price is into this area, because we already know as traders with this confluence the fact that most probably the market won't go above this swing high that was formed right here, right before the break of structure to the downside. So guys, I hope that this video was helpful. Also, I remind you the fact that if you want to see outlooks from me and one of my colleagues from FXA Trading every day on Euro USD, GBP USD, and also gold, you have a link in the description for it. We are sending it daily, and we are starting again this year on 7th of January. It means that we're giving you the structure, what we expect from the market, and also the zone. So if you feel the need of a little bit of help when it comes to seeing the structure correctly, this is the group that you should check. And also, if you want to start trading for zero, you can join the FXA mentorship. We are going to offer some available spots at the end of this month probably. So if you're interested into that, you should check that too in the description box. Thank you for watching and see you next time.